Holly Haven with Haven Home Team here, your North Texas no-filter realtor. So I've done a few videos recently where I explain the market to you guys and talk about a lot of local things like neighborhoods and communities and restaurants even. But today I want to talk about what you need to do to be a strong buyer in a seller's market. So stay tuned, we want to help you out. Okay, let's dive right into this. To be a strong buyer in a seller's market requires a little bit of work on your part as the buyer before we ever start looking at homes. The number one thing you need to do is have a loan approval by a local, qualified, really good lender, right? Your lender does make a difference. If you show up with an online service pre-qual letter, I won't mention any names, but if you can just go online, fill it out, never talk to a person, and they do national commercials, those are not strong offer letters. So we need a true pre-approval by a highly qualified, well-known local mortgage broker. We have lots of referrals, and of course, you're always welcome to work with your own lender. But we do know that that lender letter is the number one thing that sets you apart from other buyers. When the lender is looking into your pre-approval, they're going to ask for lots of documentation. They want to confirm for you and for them and for the seller that you are truly qualified. They are going to want to pull your credit history. They will want to know your debt to income ratio, and that means proving probably 2 years worth of taxes. They will also want to talk to you about what your current monthly payments are and what you're comfortable with. You will hear a few terms while you're working through the pre-approval process. You will hear the term DTI. This is your debt to income ratio, and it's exactly what it sounds like. If you have a credit card that has, say, a $10,000 limit and you only have $2,000 on it, you still have another $8,000 you could spend, and the lender will look at that as something that kind of counts in your favor and against you, because we all know that we need a strong credit score, which means we need credit cards, or we need things like our utility bills or our car payment that show that we can make payments on a timely manner. And that means proof of your credit history. So your credit history and your DTI are definitely going to work together in your favor or against you. Another term you're going to hear when you're going through the loan process is PITI. That stands for principal, interest, taxes, and insurance. That is your entire monthly payment and what you should expect to pay at the end of the entire process. So if you get a loan pre-approval and it shows you are qualified for $500,000, right? They will show you a monthly payment and you will see it in two different ways. You will see just the principal and interest, and then you will see the full monthly payment, because the lender will generally require that you escrow your taxes and your insurance every month so that they can pay it out at the end of the year. So principal, interest, taxes, and insurance. That's what you're looking for in your total payment. The next highly important factor, especially in a seller's market, is how much cash do you have on hand. This is where many of my buyers are struggling. If you currently own a house and you're hoping to buy a new home, many of my buyers are having to go through the process of getting cash out of that first home, whether that means selling the home and closing on it before you purchase a new one, which may mean that you have a little time where you need to lease in between, or it could mean doing a cash out refi of that property so that you can take the cash that you're going to need to close on the new home, as long as you can qualify with both. The third option might be that you have money in a 401k that you can pull out, use for this purpose, and once you sell the first home, you can pay those funds back. But you definitely want to talk to your CPA if you're going to take money from an IRA or a 401k or any other financial asset. In this current market, when we start talking about cash on hand, we have to consider not only the cash down that the lender might require. Let's say the lender requires you to put 10 or 20% down. On a $500,000 loan, that's $50,000 to $100,000. So you might need to have that cash on hand in order to even qualify for the loan. Now, I am talking about conventional loans there. There are lots of options with FHA and VA loans that require very little to no cash down. So I'm talking a little more about conventional loans right now because most of my buyers are winning offers with conventional loans, and it's because they have the cash on hand. There are some options with VA and FHA to still make really strong offers, so we're not counting it out, but it is a conversation we would want to have individually to discuss your options. As discussing that cash on hand, let's say it's 20% down and that's what you want to do. And I'm going to make a little side note over here. 20% down keeps you from having to pay private mortgage insurance, which is a monthly payment until you have 20% equity in the property. So, like I said, it's a little side note that 20% upfront does save you some monthly payment fees throughout the entire life of the loan, or until the point that you hit 20% and you request that the private mortgage insurance be removed. So let's say you have cash on hand. You've been saving, or you sold your other property, or whatever, right? So you have your 20% down. We're going to call that $100,000 on a $500,000 home. So at 20% down, you have your $100,000, but we need to make a really strong offer. We are not walking in and making low offers. We're not making under list price offers. We are making over list price offers on nearly every property in this North Texas market. If the property has gone on the market in the last 3 days, you can bet you're going to be competing with other very strong buyers. Some of them have 100% cash to pay. Others are working just like you and they have that cash on hand, and all we can do is write the best offer possible. And that might mean that we have to go over the list price. So let's say you have your 20% down, that's $100,000, and we need to offer, I'm gonna say as high as $525,000 or $550,000. These are just some numbers I'm throwing out there to make our lives a little bit easier. So at $525,000, you would need $125,000 cash on hand. The reason is, there could be an appraisal issue. At $525,000, you might be willing to pay this price, and other buyers might have been competitively bidding at the same price. So there is a marketable value. However, it is not uncommon for our market values to increase faster than our appraisal values. And that's what we've been experiencing over the last 2 years. The gap is closing, things are getting a little better, but we are still in competitive bidding wars, which means if you offer over the list price, you are potentially offering above today's appraised value, which means you will have to bring cash to closing. Not only your 20%, but also that cash over, the property may not appraise. So if the property appraises at $500,000 and you offered $525,000, we have a little form called the appraisal waiver. This form is vital in this market. Waiving that appraisal gap and letting the seller know that you have the cash and you are committed to paying your full price offer of $525,000 definitely helps you win the deal. The next thing we're going to have to consider if we are looking at being the strongest buyer offer that comes to the table, right? What is your timeline? Are you at all flexible? Can you allow the seller a lease back? I've seen sellers asking for anywhere from 2 weeks up to 6 months. They want to sell the home, they want you to own it, but they want to lease it. They want to live in it until school is out, for example. So these are some of the deals that we are working every single day with our buyers and sellers to make sure that it is a win-win situation for all parties. Many of my buyers are stuck in a lease. Maybe their lease won't expire until June or July, and they don't want to cancel the lease, right? They don't want to be breaching a contract. So, under these circumstances, sometimes we find that perfect property where the seller needs a lease back and the buyer has a flexible enough timeline to provide it. Now, a little side note on these lease backs. If it is 2 weeks to 30 days, we can expect potentially leasing that home back to the seller for $0. It is not required, but again, we are in a very strong seller's market and we want to be the strongest buyer offer that comes across the table so that they cannot say no. While we're discussing flexible timelines, I want to talk about builder options. Builder options are still an option, kind of depends on location and price point and really what you're looking for, but we do have lots of buyers getting into new construction contracts. That very often means that you do not have to pay above that list price, right? We're going to get locked in at a specific price and we are going to have an estimated completion date. Please note, estimated. Many times, in fact, most of my new construction contracts have been delayed. We are delayed for multiple reasons. Things like windows being shipped several weeks too late, maybe waiting up to 15 or 20 weeks for windows. We have issues getting some brick colors and brick supply, so we have had to make some adjustments there on timing and our color selections. We also have delays in simple things like tile or flooring, or even the vendors that need to be putting the flooring in or finishing up the interior of the home. So we should expect delays, and we need to be flexible. The seller holds all the cards in this market. We can be smart and we can be resourceful and we can do everything that we can, but we do have to be flexible. So if you're considering a new construction, timeline is going to be something we need to discuss. Many of our builders are on wait list to even contract. I know many of the developments in Collin County are actually sold out and waiting for a new phase development, which means that neighborhood may not be an option if you need to be in your home in less than a year. So prepare yourselves for a little bit longer wait times, or bringing me to my next point, being flexible on location. That's going to be a huge factor for many of my buyers. When we sit down with our clients, we create kind of that perfect profile. What does the perfect house actually look like to you? How many bedrooms? How many baths? How big is that lot that you're going to live on, right? Do you get an acre? Do you have a quarter acre? Or do you want that 0 lot line house because it has low maintenance? All of those things are an option and should be discussed. We need an entire profile of what the perfect house looks like for you. And then we have to get real. Once we get real, we start talking about budget. We talk about location. We talk about timeline. All of those factors are going to play into what is really important in the best home for you. So if school districts are important, we need to focus in. We need to provide you resources. We need to do some research and let you decide what school districts are most important. Sometimes it's a commute to work, right? So maybe we can take you from your preferred location to a little bit of an outskirt area, maybe an area that is gonna see a lot of future growth. Maybe you're going on the outlying areas of the larger communities and you're gonna move in and have immediate equity because so many North Texans are moving further north. So don't discount those smaller towns that feel like they don't have a lot of conveniences, because what they do have is a ton of future equity potential. The other question I keep getting from buyers is, what's the market gonna do? In fact, I'm getting this question from sellers too. We all wanna prepare, we all wanna know what to expect. So we should expect that these prices are going to continue to rise. I am estimating, with a little bit of help from some research that I've done, I'm estimating at least 2 years, potentially up to 4 years of this really strong seller's market. We do expect interest rates to rise, which will potentially stabilize us or slow us down a little bit. But North Texas is one of the #1 places in the US that people are moving into, not out of, which means we have a very strong seller's market. We have less inventory than we have buyers, and we have buyers that are begging to get to North Texas for one reason or another. So we're here, we're ready to work with you. We want to help.